Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. The yen slides to its weakest level since 1986, raising the possibility of Japanese intervention. Officials say they will act as needed to defend the currency. Kenyan President William Ruto bows to public pressure and scraps his controversial tax plan. That's after protests led to 23 deaths. And Israeli Defense Minister Yoav Gallant says arms bottlenecks have eased after talks with U.S. officials. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. A lot to get through on this show today as ever. Let's kick off talking about some of the market price action yesterday. The S&P did manage to eke out a minor gain, up about 0.2% by the close yesterday. One stock in focus, Rivian, up more than 20% after VW disclosed that $5 billion stake. However, after hours, things turned once Micron issued a slower than expected forecast on their revenue guidance. In response to that, we saw chip makers come under pressure. Micron down 7% in after hours. That's dragging down some of these futures. So as you can see behind me, S&P futures are leaning towards the red. NASDAQ, too, also leaning towards a negative open today, down 0.5%. But as ever, we are keeping a close eye on what's been happening with these U.S. yields. 10-year yesterday, big move upwards, 7 basis points. And a lot of that is around speculation over what the Japanese government is going to do vis-a-vis the dollar yen. And look at where we're at, through 160 now, the lowest level the yen has been since 1986, leading some to question whether intervention is nigh. We're going to talk about that shortly, in addition to possible ramifications on Japan's holdings of U.S. Treasuries. So if they start selling, then that could obviously have a big impact on where U.S. Treasuries are trading. Now, you'll see over here I've put up a chart of Turkey because we've got an important interest rate decision coming up today. Nobody's expecting the Central Bank of Turkey to make a decision on rate hikes or rate cuts either way. Unchanged is what is expected. 50% is where the base rate is right now. Inflation at 76%. But what you will see from this chart is as the Turkish central bank has hiked rates, this has started to have an impact on the consumer confidence and public confidence. So it is beginning to have an impact on the broader economy and on credit lending as well. Not the only central bank today. Also bear in mind we have Riksbank coming up later too. They cut at the last meeting. No one is expecting a cut coming out of today. But let's talk more about the yen, because this is the main event that people are focused on in markets. The yen's continued slide is showcasing the Fed's grip on global markets. The Japanese currency has fallen to its weakest level since 1986. And that slide is unlikely to ease until the Fed relents on its higher for longer policy path. Our Asia Economy and Government Senior Editor, Brian Fowler, joins us now. And Brian, I guess the question is, are we due for a yen intervention?
We very well may be. We saw in late April and early May, the Japanese financial authorities entered the market and they conducted the biggest ever intervention in support of the yen. The yen subsequently strengthened temporarily for a little bit, and now this morning and last night, it got to levels that were actually weaker than where it was back then. So it's definitely within the realm of high possibility. The big question is timing. The view in the market is with the PCE deflator data from the U.S. coming on Friday, it would probably make sense for Japanese authorities to wait until then, because otherwise they do their thing and they spend a lot of money, and then you know, those figures come out and move the market. So the big bet right now is watch for Friday, New York morning, Tokyo night, for those data to come out and see what happens after that.
So let me ask you about how much ammunition they have in the toolkit. Recent bouts of intervention, they spent more than $60 billion trying to support the yen. And of course, that did not really work. We saw some form of a short-term stabilization. We're back at 160 now. Is it a fool's errand for the Japanese authorities to try to intervene when you're up against a more hawkish Fed and such a deep interest rate differential between U.S. Treasuries and JGBs?
Well, you know, I guess it depends on what we think MOP is trying to achieve. So they definitely are not going to turn things around. As you say, the interest rate gap between the Fed and Japan is huge, and it's going to stay that way for the next few months, and we know that. On the other hand, Japanese authorities would say, well, we're not really trying to completely reverse levels. We're trying to sort of smooth things out maybe quiet some of the volatility in the market. And in that sense, you could say that the intervention we saw a couple months ago did have an effect. It did cool things off for a little bit. Right now, the market, though, is heavily bearish. We've seen a lot of shorts on the yen, which tells you that the bearish sentiment is widespread. That also, of course, could increase the impact. If Japan does enter the market, you could see a big batch of short covering that would enhance that move.
Makes sense. Our Asia Economy and Government Senior Editor, Brian Fowler from Tokyo. Now for a look at some of the other stories we're following today. Bloomberg has learned that SpaceX will sell insider shares at $112 each in a tender offer that is higher than expected and boosts the value of Elon Musk's space and satellite company closer to $210 billion, according to our sources. The world's second most valuable startup decided to price its offer higher after significant investor demand. The new valuation is a record for an American private company. And Amazon has reached a $2 trillion market valuation for the first time ever. The stock is up more than 50% in the last year as the artificial intelligence boom continues to fuel a global tech rally. The mega cap joins Alphabet, Nvidia, and Apple in the $2 trillion market cap club. And Micron Technologies declined in late trade after the company's outlook disappointed investors. The largest U.S. maker of computer memory chips has been getting a boost from the AI boom, but demand is sluggish in traditional markets such as personal computers and smartphones. Micron forecasts fiscal fourth quarter sales of between $7.4 and $7.8 billion. However, some analysts were projecting sales in excess of $8 billion. That explains the down move that we saw in Micron in after hours, down more than 7%. All right, let's bring in Nadia Elbilassy, the senior market analyst at Equiti Group. Good morning to you, Nadia. Feels like there's been a bit more volatility than usual in stock markets this week. We had that full round trip for Nvidia. Micron, after hours, quite a severe pullback after they released their forecast for sales. Does this tell you that perhaps the market is running out of steam?
Yes, we think that at the summertime we're going to start seeing a breather because of the high valuations and also because of growth slowing down. We're waiting for GDP numbers later today that will give us more clues, but we do expect that there's equities in general are going to take a breather in the summertime. And also, we are expecting tech stocks, it could be sustainable for them to continue going up. However, definitely, I think we're bound to hit a pause.
Let me just ask you whether you think if there is an equity pause, that would be construed to be a buying opportunity for people in the market. Because, again, Nvidia, a couple of days ago, the story was very different. We were talking about maybe this being an ongoing correction, and yet people were very quick to come in and buy the dip.
I think there's definitely going to be an opportunity to buy the dip, but I think we're going to see a sizable correction in July, second week of July, I presume. Just because historically the first week of July usually sees higher volatility and more gains for stocks, and then after that, everyone's going away for the summer, so then we're bound to see a pause.
This is a question that I've asked other people, but to what extent is the fate of the S&P and NASDAQ determined by one single stock, Nvidia? What happens with it from here onwards?
I think that, the Magnificent Seven, they're responsible for 60% of the S&P revenue so far this year. Yes, we have most of them being overvalued, but I still think that they do have the capacity to go higher because of the high demand for example, NVIDIA's H100 processor. So I still think that there's a capacity for them to really be like the barometer for the S&P. However, there's also other kind of alternative stocks that are also being pulling higher the S&P, but I think definitely we're going to see a breather in July.
So tonight, we've got a big election debate, presidential debate between Biden and Trump.
Yes.
And that's going to be obviously very influential as we head into November. From a market participant's perspective, how are you thinking about the possibility of a return of President Trump and what that would mean for tariffs and some of the domestic economy, how that's going to impact the consumer should tariffs start being introduced at a blanket level?
In light of trade war with China, I think this is going to be more affected. I think it's going to be more heightened. Let's say the tensions between China and the U.S. I think already they've placed a lot of tariffs over the past few months. That things are getting a little bit more tensed. I think a Trump administration is really good for the cryptocurrencies and for the stock markets in general. Just from what we've seen, any word from Trump really moves markets. It really gives us that volatility that we want, especially as brokerage companies. So I think a Trump administration is really going to be something incredibly, let's say, enthusiastic in the markets. And it will bring more optimism, definitely, than a Biden administration.
Interesting. Okay, interesting perspective from a market participant. The other phenomenon that we've been watching very closely is dollar-yen. And I wonder to what extent you're looking at that and thinking, if yen weakness continues, then that also is going to have ramifications on domestic markets and U.S. markets.
I think that we're waiting for a Bank of Japan intervention. We've already seen numerous ones from April till today. I think the dollar-yen still has the capacity to go over 160 despite the many interventions that we saw. But we saw above 160. We saw 162. There's actually many banks that are saying that it could hit 170. So I think it's going to continue depreciating. So far, I think we still have the capacity to see 165. After that, then, and that's also giving a momentum for gold prices. The yen depreciating is also supporting the bullion, but things have changed since the last time of the year.
Yeah, let's just wrap up the discussion with gold then. I see that you've written about gold in your research report, and gold is interesting because China have been buying more and more of the bullion in some form of a way to rotate against the USD. Do you expect that to continue?
So they've halted that last month, but I think that at any given time this may continue, and this could push gold prices up. But I think that on a technical perspective, we're seeing a head and shoulders pattern. So we're looking at levels below the 2,300. And I think that if we continue in that way, then we can see 2,270 or 2,250 levels as basically a big support for gold prices.
Brilliant. Nadia, we'll leave it there. Thank you so much for joining us today. Nadia Elbilassy, Senior Market Analyst at Equiti Group. And still ahead, Kenya's president scraps a controversial bill proposing steep tax hikes after deadly protests across the capital. We have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, just in the last few minutes, we've got some breaking news for you out of SoftBank. Interesting announcement here. The Vision Fund 2 is going to be investing in U.S. AI startup Perplexity AI that would give it an overall $3 billion valuation. And according to the report, SoftBank will look to invest between $10 million and $20 million in the firm. And what the firm does is, of course, look to incorporate AI technologies to compete with the likes of Alphabet, Google Search, according to people with the matter and familiar with the matter. And what SoftBank are saying that they are investing as part of a larger $250 million funding round that would triple Perplexity's valuation and make it one of the industry's most highly valued companies. So this has just come through now. Very interesting to see that Vision Fund 2 are looking to get involved in the AI phase. Now, Kenya's president says he will not sign a controversial bill proposing steep tax rises that sparked deadly protests this weekend in Nairobi. William Ruto bowed to public pressure after the deaths of at least 23 people. Now, for more on this, Bloomberg's Ondiro Ganga joins me now from Kigali. Ondiro, I watched the president's speech yesterday. It was a full concession. He literally said, "I concede, I will not sign the bill." This is a victory for the demonstrators.
Well, is it, Jumana? Is it a victory? I think one thing that has remained very clear is the sheer determination of Kenyans to get their voices heard for once. Last year, they tried this protest. It did not work. And this time around, they've realized that the more they apply pressure, the more they push the government towards the wall. And I mean, the last two speeches that we've heard from the president, a day and night, a day before he was saying what happened was treasonous. These are dangerous criminals, and I'm leading this country. And in his latest address, we see him say he leads the people. He wants to have a conversation with the people. And as you rightfully said, I concede. What happens next is that this bill is going to be sent back to Parliament. And what was so interesting is the president was flanked by the very members of Parliament that passed this bill. He will send it back to them together with a presidential memorandum recommending that they delete all clauses from this bill. There's also been mounting international pressure on Kenya. We saw the United Nations Secretary General Antonio Guterres say he's deeply concerned about the violence and cases of arbitrary detentions that have been carried out by the police, saying that the authorities need to practice a little bit of restraints. Kenyan feels it's a little too late for this. The bill has been unpopular for a while, and they feel that they cannot trust the government at this point. They're hitting the streets again today, and we'll be watching that to see what new messages come from this protest.
So we talked about the social unrest aspect, but yesterday when you and I were talking about the state of Kenya's public finances, we spoke about the fact that that debt to GDP ratio is sitting very high. The IMF have warned about the possibility of Kenya going into debt distress. In the absence of further spending measures, revenue-raising measures, what options does the government have, and how are markets likely to react?
Jumana, the markets had some form of reaction yesterday. If you look at securities, they handed investors negative 1.3, and this is since the 18th of June. This is one of the biggest losses after Egypt and Gabon, according to a Bloomberg index of developing nations' sovereign dollar bonds. But if you look at Kenya's 2031 dollar bond, it reversed early after President William Ruto made his remarks. We saw it trade slightly stronger with yields at 10.67%. There remain concerns in Kenya. Long-term solvency remains an issue, even though short-term liquidity issues have been addressed. There are also other challenges in this economy. For example, geopolitical tension that has affected energy prices and food prices, which then in turn affects CPI. So there are a couple of challenges that need to be addressed. But in terms of what options they have, the president briefly mentioned that austerity measures will begin in government, and we're likely to see more budget cuts.
Yeah, well, it's either that, it's austerity or raise revenue somehow. They don't have a lot of options. Bloomberg's Ondiro Ganga, thank you for the latest. Now, switching over to the Middle East region, Israel's defense minister says talks with top White House officials have eased what he describes as bottlenecks in the supply of arms to Israel. Yoav Gallant praised the bond between the U.S. and Israel as both sides look to ease tensions fanned by accusations that the U.S. was withholding weapons.
Since Hamas' brutal attack, the United States has stood by Israel. This includes working together in facing the Iranian assault mid-April. We appreciate the support we have received, both overt and covert.
Al Dubai's bureau chief Dan Akhresh joins me here in the studio. More conciliatory words from Israel towards U.S.
Yes, it seems Israel wants to showcase that the visit by Gallant was successful, right? He spent 3 days in Washington, met with these officials, and now he's saying that there is progress, citing progress in the talks. One, about what he called bottlenecks in terms of arms delivery, and this is, of course, over what Prime Minister Netanyahu accused the U.S. of withholding arms at a very critical time for Israel's existence, fighting on several fronts. So definitely Gallant wants to say that, or the U.S. and Israel wants to show that they're on good terms. The relationship is very strong still. We did see from our own reporting a U.S. official saying that, or acknowledging that there were delays, but saying they weren't intentional, but has to do with more of the complexities of those arms deliveries. And of course, the U.S. has been sending billions of dollars worth of arms since October 7th to Israel. So both parties are saying everything's okay.
Yeah, well, they're saying everything's okay. And then the obvious question from here onwards is, what are the arms going to be used for? Because we've already heard from the Prime Minister Netanyahu in the interview he gave over the weekend that they're looking to start reducing the intensity of fighting in Gaza and potentially redeploying up to the north. Did anything come out of Gallant's meetings in the White House vis-a-vis what they're thinking about the Lebanon border?
Definitely. So Gallant repeated what Israel has been saying for several weeks now, that the intensity of the fighting in Gaza is going to slow down, and that means that they're going to turn their eyes onto the northern border with Hezbollah and Lebanon. And we heard Gallant in the U.S. also saying, we want diplomatic solution, but if that doesn't happen, then we are ready to, quote unquote, bring back Lebanon or take it back to the Stone Age. And that's been kind of a rhetoric that they've been using for decades now, I'd say years, since the 2006 war. So this is now what we're waiting to see, when this announcement would be that they are reducing tensions in Gaza and turning their eye onto the northern front.
Yeah, one thing that I also have in the back of my mind is the Prime Minister Netanyahu is due to address U.S. Congress at some point in July, right? Mm-hmm. So in the run-up to that, it will be interesting to see how these conversations evolve.
Definitely.
Dana, thank you so much for coming on. That was Dubai's Bureau Chief, Dana Kharish. And also coming up on our show, on the eve of the first Biden-Trump presidential debate, we speak to the German Marshall Fund about how the November presidential election could impact the economy. This is Bloomberg.
Deal flow is still not quite there.
Private equity has slowed a little bit in the activity.
In our pipelines, we're seeing a meaningful acceleration in deal flow.
The key concern we have is, will there be activity where the buyers and sellers meet in the middle? And that hasn't quite happened yet, but I'm hopeful it will.
For the credit markets, you still have a lot of options, whether it's a recap, a minority sale, and that's what we're seeing. So it may not be asset sale outright, but a transaction is going to occur.
Now that rates have stabilized and that cuts are on the horizon, we are seeing the pipeline pick up meaningfully, which means you should start to see more deals, more velocity, and even if the base rate comes down, it's still going to offer a pretty attractive rate.
Leaders in asset management, banking, wealth, and private markets commenting on the outlook for deal activity during the Bloomberg Invest conference in New York City. Now, for a look at some of the other stories we're following this morning, Bloomberg understands that Qatar Airways is seeking to acquire about 20% of Virgin Australia Airlines. The deal would expand the Gulf carrier's presence in the country, but it requires Australian government approval. It comes after a request by Qatar Airways to operate more routes to Australia was rejected in 2023. Virgin Australia crumbled weeks into the COVID pandemic in 2020 under a pile of debt, wiping out then shareholders, including Singapore Airlines and Etihad. And Mizuho is the latest financial firm to comply with Saudi Arabia's requirement that foreign companies set up their Middle Eastern bases there. Bloomberg sources say the Tokyo-headquartered bank recently received a license, but it's not clear yet how many bankers will move to Riyadh or how much of Mizuho's regional operations will ultimately be based there. And we are heading to a break. When we come back, we're going to be talking about that presidential debate in the U.S. We'll be right back. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. The yen slides to its weakest level since 1986, raising the possibility of Japanese intervention. Officials say they will act as needed to defend the currency. Kenyan President William Ruto bows to public pressure and scraps his controversial tax plan. That's after protests led to 23 deaths. And Israeli Defense Minister Yoav Gallant says arms bottlenecks have eased after talks with U.S. officials. Welcome back to the show, everybody. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Let's do a quick recap of how markets fared, because we did see a moderate positive gain to the S&P into the close yesterday. Rivian in focus, the stock up more than 20% after VW disclosed that $5 billion stake. But in after hours, we got some disappointing sales numbers out of Micron on its memory chip. So that's pulled down the sector as a whole. S&P and futures, S&P and NASDAQ futures are both leaning towards the negative as we head into the U.S. session. U.S. Treasuries yesterday up 7 basis points throughout the course of the day. 10-year sitting at 4.33, despite a better than expected 5-year auction. And then yen, as we've been talking about the last couple of days and on the show, broken through 160, the weakest level since 1986. Also on our focus today is the Central Bank of Turkey. They are yet to make an interest rate decision. No one is expecting them to change on interest rates. They expected to keep them at 50%. But as you can see from this chart over here, the more they've tightened, the more of a credit tightening impact that's having on the economy and on sentiment as well. So something to watch out for as we head into that Turkish interest rate decision later on today. And this, as the backdrop to inflation, of course, it's sitting at 75%. The target is 38% by end of the year. But let's talk more about what's been happening with some of these Asian currencies. It's not just the yen, but the yuan is in focus as well. Avril, tell us more.
Yeah, yuan, yen, and a bunch of others that have been on the back foot. But let's talk through what we're seeing in equities first, as the chip stocks are tracking Micron, right, and how it missed on that sales forecast. Just when we thought we got through the NVIDIA correction earlier in the week, those are the drags on the benchmarks today. But it's not just tech that is underperforming. We're seeing across the other sectors on the Asia stock gauge are in the red as well, which tells us that it is about the event of the week, those PCE numbers out of the US that are the focus. Flip the board. We have this higher for longer narrative coming in, reinforced, of course, by Australia CPI print yesterday, coming in hotter than expected, dashing those hopes about disinflation. That's helping these G10 currencies, but we've seen how the yuan and the yen have been losing ground. And among them as well, the Indonesian rupiah, the peso, these are all the currencies that have been declining. Now, we are seeing the Japanese yen actually recovering from that 1986 low of 168.7. But as long as these Japanese rates don't go high enough and the US ones don't come low enough, the weakness on the Japanese currency is just the reality that we have to deal with. On the yuan, just very quickly, something that I wanted to highlight, PBOC coming through with another weak yuan fix. Longest streak, we've seen this in more than a year thereabouts, and this suggests they are coming through with a controlled devaluation, not just about the PCE, the risk is also for further in the year, the US election, what that's going to mean for the tariffs front. Jumana.
Yeah. Well, also, you have to think about the dollar angle with the DXY seeing its best day in 3 weeks yesterday. Avril, thank you for the overview. Now on to U.S. politics. Joe Biden and Donald Trump are preparing for the first U.S. presidential debate ahead of November's election. Third-party challenger Robert F. Kennedy Jr. won't take the stage after he failed to meet the criteria to qualify, which can be seen as an early victory for the Biden campaign. So for more on this, Bloomberg's Markets Today anchor Kriti Gupta joins me now from London. Kriti, getting the popcorn ready. There are a lot of expectations going into this debate, but the debates were somewhat chaotic back in 2020. How is CNN trying to keep things under control this time around? How do you control the two men on stage?
Well, the stakes are very high, to your point, Jumana, and there are a couple of rules that CNN in particular is putting around this debate. The first one is going to be muted microphones. That's really important when we're talking about interruptions and addressing the interruptions. That has been a feature of previous debates on both sides of the aisle, by the way, but of course mostly associated in the press with President Trump. Already you've seen campaign officers kind of set the tone for the fact that that might actually happen. CNN getting out ahead of it and muting those microphones. If either candidate goes over their allotted time, the debate modifiers can then mute that microphone. Remember, it is a 90-minute debate. There are only 2 commercial breaks within the entire duration, so time is of the essence between the two. On top of that, it really provides limited room for each of the candidates to consult with their debate teams, to consult with their campaign teams in the meantime, which has been, by the way, a feature of the past. There also will be no in-house audience when it comes to how this is all set up. There will be no live town hall, which could encourage things like booing in a certain answer or any sort of extra noise, which again has been a feature of previous debates. And each candidate will only have pen, paper, water, and will not be allowed to sit for the duration of the debate.
Interesting. And also because there is going to be so much focus on the physical state of both of the candidates. A lot of videos have been going around about Biden's health, about his age. You could say the same for President Trump as well. But beyond that, what are the policy messages that we should be watching out for? What are they going to be debating on that's relevant to the viewers?
Well, this is absolutely, to your point, Giovanna, going to be a test of endurance for both candidates, and specifically Joe Biden, who, of course, has been attacked and really criticized for not having the mental and physical stamina when it comes to things like deplaning or deboarding. Getting off planes is what I'm trying to say. This is also going to be a big question of the age story. Is he fit mentally in terms of being able to hold this? In terms of policy, Jumana, there are a couple things here. The immigration policy is going to be front and center. This is also coming, by the way, just a couple of days after literally last night, you saw some of these Supreme Court decisions at least kind of roll out, even be leaked, potentially. Bloomberg reporting that there were decisions posted that may not be the final decision, but released. Those are all due to be hot topic issues in the debate. Border policy is a big one. Of course, Trump coining the phrase build the wall, what Biden's going to be doing about cutting down on the immigration. Remember, Biden has been really talking about cutting back on asylum visas. That's going to be a big feature of the conversation. Not to mention foreign policy. How does this affect things like tariffs, the deficit? All of this coming up in the talk tonight at 9 p.m. Eastern.
Yeah, looking forward to it. Bloomberg's Markets Today anchor Kriti Gupta, thanks for the overview. Well, for more on this, Sudha David-Wilp, Berlin office director at the German Marshall Fund of the United States, joins us. Good morning to you, Sudha. My colleague Kriti highlighted some of the policies that will be discussed at tonight's debate, including immigration, the economy, tariffs, foreign policy, all of the above, all very important, of course, but it feels like the focus for many is simply just going to be on the two men's physical state.
Yes, good morning, Jamala. I do think that this debate will be one of monitoring the physical demeanor of both candidates and less on the substance. But, you know, there is a lot to talk about since these two men are meeting again in just 4 years. I think most Americans are surprised to see a repeat of 2020, as is the rest of the world.
Yeah. In terms of foreign policy, let me just start there, because, again, as we know, former President Trump has floated the possibility of blanket tariffs from the rest of the world, very high tariffs coming from China. What does that do to U.S.'s relationship with Western countries around the world and with, you know, traditional allies?
Well, I think if President Trump returns to the White House, you'll see a resurgence of the America First policy that he touted when he was on the campaign trail all the way back in 2016. And that means that, you know, allies are not as valued. Everything is looked at through a transactional lens, whereas President Biden really restored a lot of credibility among allies when he came into office in 2020. He sees America's alliances in Europe and also in the Indo-Pacific as sort of a force multiplier, and that's not the case with President Trump. But on trade, both men are quite similar. Both want to see a stronger manufacturing base in the United States, but President Trump is certainly open to using draconian tariff policies that could, you know, make it very difficult for Europe and the United States. A 10% tariff across the board and 60% tariffs on goods from China will certainly split the United States with its allies, because Europe, for example, depends a lot on trade with China.
So let me just bring in the Europe angle here. We are just coming on the heels of these European parliamentary elections, and what we did see was a surge in the right, particularly in Germany and France. And I wonder to what extent, should President Trump return as president, he would actually find more willing allies in these parties of the right in Europe than he did in his last term.
Yeah, it's interesting that you say that, because I think most people thought here in Europe after the EU vote that all eyes would be focused on November. So President Macron really surprised everyone when he announced a snap election shortly after the EU vote. And there has been a resurgence of the right all across Europe. The center did hold for the most part in the European Parliament, but one cannot deny that the right had strong performance, and that will hurt countries that are looking to make Europe stronger. Right-wing politicians will probably hinder aid to Ukraine, joint spending in Europe for innovation, and also, of course, the Green Deal policies. And President Trump might find kindred spirits in politicians, like in the national, for example, the National Rally in France, or of course, Viktor Orban. Hungary is set to take over the EU presidency very shortly. So this will also split Europe, and it may be hard for Europe to speak in one voice if President Trump would like to deal with countries on a separate basis rather than going through Brussels.
Mm-hmm. Sudha, I know that in the past, President Trump has directed very strong words at NATO, even threatened to pull the U.S. out of NATO. It feels as though some of that rhetoric has started to calm down, but still, the point there is that he wanted to push other countries within the alliance to boost their defense spending. Do you think there is any risk of the U.S. pulling out of NATO should other NATO countries not actually commit to those defense spending targets?
So when President Trump came into office, he certainly demanded that NATO countries meet their obligations to spend 2% on defense. And many countries started to do so, but not really enough. It was the war that started in 2022, the full-scale invasion of Ukraine by Russia, that I think most countries realized that they needed to do more for their own interest in spending on defense. And right now, approximately 2/3 of countries in the alliance are meeting that 2% commitment. And countries like Poland are even spending more. And I think President Trump sees that, and there is quite amount of bipartisan support for NATO in Washington. So Trump's threats are not necessarily looked kindly upon among Republican members in the Senate and in the House. So the rhetoric that he says these things at campaign rallies that, if you don't pay, then I would invite Russia to do whatever it needs to do. That is not, even if the U.S. doesn't pull out of NATO, just the fact that the U.S. is doubting the credibility and the importance of NATO puts it on shaky ground. And I think that's why most Europeans are very nervous about President Trump coming into office, because is the U.S. going to honor Article 5 if something were to happen? And also, is the U.S. there to really continue the success of this incredible alliance that is celebrating its 75th anniversary this summer?
Yeah, and then, just to round it up there, because it's a natural follow-on to our discussion about NATO, is how you think a President Trump, should he come back, affect the outcome of the Russia-Ukraine war, especially with so much resistance amongst Republicans to keep providing military and economic support to Ukraine?
I think, regardless of who comes into the White House, Ukraine and Europeans also realize that most spending on further defense and reconstruction will have to come from European coffers. But of course, President Biden has been a stalwart supporter of Ukraine and has rallied other Europeans to, build a bloc and make NATO stronger. I mean, NATO has become stronger since Europe has experienced the largest land war since World War II. Now, President Trump, I don't think, makes people comfortable. In fact, probably makes people uneasy here in Europe when he says he thinks he can solve the conflict within 24 hours, or 48 hours. And I don't think that necessarily will be advantageous for Ukraine.
Yeah. And also from the region that we're broadcasting from, Middle East, I think people are watching very closely to see what's going to happen with those elections. Sudha, thank you so much for joining us today on the show. Sudha David-Wilp, Berlin Office Director at the German Marshall Fund of the United States. Thank you. Now for a look at some of the other stories we're following this morning. UK Prime Minister Rishi Sunak and Labour leader Keir Starmer clashed on taxes and immigration in their final TV election debate yesterday. Starmer accused Sunak of being out of touch, while Sunak attacked Starmer for trying to strike better trade ties with the EU. According to Bloomberg polling, Labour leads the Conservatives by 21 points, putting them on course for a landslide victory next week. And Bolivian President Luis Arce has sworn in a new army commander after troops led by the general's predecessor stormed the presidential palace in an attempted coup. Hours earlier, Bolivian troops crashed a tank into the palace. Now, in a bid to overturn Arce's socialist government, his administration has struggled with an economic crisis amid dwindling natural gas exports, a shortage of dollars, and a currency peg that has effectively collapsed. Also coming up, a familiar face is taking the helm of the Swiss National Bank. More on what to expect from the leadership of Martin Schlegel. That is coming up next. This is Horizons Middle East and Africa. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersecci in Dubai. The Swiss National Bank Vice President, Martin Schlegel, has won a promotion to the central bank's top job. This selection comes as no surprise since it's usual for the institution's number 2 official to get the top position. Schlegel will be the second youngest chief in the SNB's history. Now, for more on this, Bloomberg's Bastian Benrath joins me now from Zurich. Just give us a sense for how monetary policy might be influenced with this new SNB chief, if at all.
Well, actually, this is the interesting question because I don't think we're going to see a lot of changes. So Martin Schlegel actually joined the SNB as an intern to the previous chairman, to Thomas Jordan, a long time ago, but still he kind of like followed Thomas Jordan through the institution, and he is widely seen as his protege and also as his choice for succeeding him. So since he's also been on the board for a while as vice president, he's been very familiar with the monetary policy thinking of his mentor, of Thomas Jordan, and it is widely expected he will take up that very much like he did, and I don't think we're going to see a lot of changes. What changes which we might see might include more other areas other than policy. It's more that, like as we said, Schlegel is a young president, second youngest in the history. He's only 47 years old, so I think what we might see is a different kind of communication or something. But I think in terms of interest rate decisions, the SNB is just going to continue on the path which is on.
Yeah, and the path they're on is obviously cutting because they surprised the market with an interest rate cut at the last meeting. Let me just ask you perhaps a more holistic question. In my previous life, I covered the Swiss economy very closely. I've spoken to the S&P chief, Thomas Jordan, several times, but I think what people will remember him most for, perhaps, is that massive expansion of the balance sheet. How is that going to look different under a new chief?
Well, I don't think it's going to look a lot different under Schlegel because Martin Schlegel was actually the person who executed the surprise end of the franc cap back in 2015, which sent the franc skyrocketing, right? So this is like the one monetary policy decision everybody remembers about Switzerland. And Martin Schlegel was actually the one like pushing the button. There's photos of him like being in the SNB trading room and like executing this decision. I think he will stand by the policy of influencing the franc's exchange rate through the balance sheet. However, it is to be noted that the balance sheet has reduced over the last years. It's not quite as big anymore as it once was. It was once over 1 billion francs. No, actually 1 trillion francs. I'm sorry, over 1 trillion francs. It has gone down now, exactly. But it's still bigger than Swiss GDP, so it's definitely still bloated. And the IMF and other international institutions warn of that continuously. But I don't think we will see a change there with change in policy there with Martin Schlegel now.
Yeah, but that's good market intel that Mr. Schlegel was behind the removal of the peg so many years ago, a very big moment in financial history. Bastian, thank you so much for giving us the overview of what to expect out of the new SNB chief, Bastian Benrath. Now for a look at some of the other stories we're following as well. Turkey's central bank is set to release its latest rate decision this afternoon, with analysts surveyed by Bloomberg unanimously predicting the repo rate will remain at 50%. Wall Street lenders like Bank of America anticipate the first cut closer to the end of this year, while Morgan Stanley has pushed back its expectations of easing to the first quarter of next year. Rate hikes from earlier this year have only just started to drag on the economy, with inflation on track to start slowing after May's peak of 75%. And coming up, we are live in Brussels as EU leaders meet again as they look to agree the bloc's top jobs. We give you the details next. This is Bloomberg. European Union leaders are meeting again as they look to wrap up a deal on the bloc's top jobs after failing to reach agreement last week. And they're poised to nominate Germany's Ursula von der Leyen for a second term as president of the European Commission. So for more on this, Bloomberg's Oliver Kirk joins me now from Brussels. Look, Oliver, just give us a sense of what's going on with these top jobs. We know that Meloni was a little miffed that she wasn't part of some of these discussions.
Yeah, more than a little. She was railing out against the EU in the Italian parliament yesterday and will arrive today in Brussels, which gives you some of the sort of flavor of the power dynamics going forward here in the European Union. But broadly speaking, you know, there's those three top jobs, the presidency, which will likely go to Ursula von der Leyen, then Kaja Kallas from Estonia and the Renew Party will likely take the foreign sort of post, and then, of course, Antonio Costa to be the council president. These were sort of the broad structure that we were expecting for the top jobs of the EU, and everything sort of trickles down from these. So without these sort of jobs being announced, all the other commissions, all that other stuff cannot really be sort of doled out quite yet. And that is really what the EU leaders are going to present today. That is sort of the great deliverable of today. What they will also be presenting, though, Jumana, is this sort of strategic agenda. This is basically the outline for the EU and its new government and what it wants to achieve over the next 5 years. You're going to see a lot of the same themes that we've been talking about, whether it's Ukraine, defense, but also that key question, Jumana, about competitiveness, as there's all this anxiety here in Europe and in Brussels about China and all of the other sort of competitive factors globally.
And of course, probably taking a closer read at the articles that Mr. Draghi has penned on competitiveness. Oliver, thank you for the latest from Brussels. Well, that is it for our show today, Horizons Middle East and Africa. I'm Jumana Bersecci in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.